Hello and welcome into the KE Report. Chad and Corey here, getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, it's always great to get you on every couple of weeks and just pick your brain as to what part of the commodity complex or the markets have your attention. We were talking off mic a little bit about silver and the catch-up trade in the mining stocks and just some nuances around the silver mining stocks. We have a lot of interest from people that follow the show in the silver sector and also the silver equities. So love to just open it up to you as to your general thoughts on the lesser precious metal silver and the silver equities.
Sure. Well, let me say that I have been pretty bullish on gold for quite some time, but even as I have put more gold picks into Resource Trader and Wealth Megatrends, I've actually been adding more silver miners to Resource Trader because when these metals run, silver tends to outperform and silver miners tend to outperform everything. And we could go over all the stuff why I'm bullish on gold, but since you just want to talk about silver, I mean, I think that the Silver Institute, I don't have the stat right in front of me, but it's expecting the deficit in the amount of silver that comes out of mines as opposed to how much we use. That's supposed to widen by something like 17% this year. We're already in deficit, but it's just getting more and more. One reason is you can't really increase the amount of silver that is produced even if you want to, because most silver comes as a byproduct of other metals, whether it's copper or zinc or gold. I mean, it's a byproduct. There aren't many pure silver miners. That's the point. And so that makes those miners that do mine silver and that are good at it, that don't dilute their shareholders, which is, I can think of at least one company where that's a serious problem. Those companies that are good at it tend to look very, very good when silver runs. Now, I was just showing my subscribers from the last bottom, which was on August 7th. Gold's up something like 4.5%. Silver's up more than 9%. So silver's starting to outperform again. And silver miners are outperforming quite a bit. They're doing very well. And so I think that if this isn't the big move in silver, we're close. And so early last week, I sent my Resource Trader subscribers a new report on gold, and I included some silver picks in that went to Wealth Megatrends at the end of last week. All those picks are up nicely. And we really seem to be reaching the point where good stocks will start to outperform. Now, we have discussed this before. I tend to focus on those companies that are actually producing or on the track to production. I don't do pure play explorers, and I can't really speak to how the pure explorers are doing. My problem with those companies is, it's an expensive business. So they tend to get diluted even if they don't want to, just trying to keep the lights on. So I like companies that have cash flow coming in, and I think those are doing well now. But when you look at the potential in like silver miners, they can outperform gold miners so much that I think you have to include some silver miners in your portfolio. And it really comes down to, or at least one of the major drivers seems to be, the demand from the solar power industry. And that's good because silver doesn't have one of the things gold has, which is all the central bank buying. I mean, central banks have been steadily buying gold. It's really one of the major underpinnings of the gold rally, that and the fact that the US dollar looks to be in serious trouble now. We can get into that. But one of the things is, since silver and gold are priced in dollars, as the dollar goes down, silver and gold tend to go higher. And then you add in solar power demand, which is really increasing silver imports to both China and India. I mean, there's some real potential for an explosive move here, I believe.
So, Sean, let me update you on the silver juniors then. They're not doing very well. A
Oh,
lot
okay.
kind of like the gold juniors. Some are, the standout companies are, but broadly, juniors continue to struggle. You are right, though. Silver stocks can provide that torque, even on top of the gold equities when silver runs, but silver has kind of been underperforming gold. The gold silver ratio is just over 90. It's still in the high 80s. Silver had a nice 3-month run in March through May, and we saw some big volume come into SIL, even into silver, but that has also petered out. So What is that next leg higher for silver? What is going to bring in that interest? Is it simply a gold breakout, which in all fairness, we have had and we are continuing to have?
Yeah, well, I mean, we are having a gold breakout, new highs. That makes pretty much everybody happy except the bears, right? But I mean, since early August, silver has been outperforming gold. And so usually silver goes along for the ride as gold goes higher. As you mentioned, for a long time, silver has underperformed gold, and that could still be a problem. But I mean, when you look at the shortages, or at least shortfalls in how much we want to use, which is a lot compared to how much comes out of mine, there's at least the potential for a real supply demand squeeze in silver. And that's when you'll get your real outperformance. We haven't seen real outperformance yet. When it comes, you'll know it. And again, I don't know how that will move the explorers, but for those companies that are producing, that have silver they can sell, that can be taken over by other miners that want that, or else those companies that are well on the path to production, is maybe 1-2 years out, stuff like that. Those companies can really move. I don't want to speak to explorers because they're a whole different kettle of fish, but I think people should be moving into those companies that can produce now. And this is important, and I have to say it again, are not diluting their shareholders, whether it's issuing shares to buy other mines or else issuing shares just to buy the CEO a new yacht. For whatever reason, they have to keep their share issuance under control, and they have to keep their costs under control. Now, costs can go up. Costs are going up everywhere, really. So that brings to mind, well, wouldn't I just want to stick with a gold royalty company? I have nothing against those, but I think the potential outperformance in the silver market is worth a look.
Well, Sean, when you talk about the producers, and it's something that I think it's worth diving into a little bit further, a lot of their numbers, they make money anything over the mid, let's say 20s. And so with silver up above 29 right now as we record this, some of them are doing okay. I think a lot of people wish they were doing better, but they've had cost creep higher, just like the gold miners have, just like the copper miners have. But if silver was to blast off into the mid 30s, let's say it gets above that 32.75 level that it hit recently and gets up into the 33, 34, 35, the margin expansion that some of those producers would have would really outstrip anything else in the commodity sector because it would be happening so quickly. Every time they add a dollar onto the silver price, it would be very meaningful. Does that factor into some of the due diligence you do when you get into these producers?
Absolutely. One I just recommended for my resource trader subscribers has tight margins now. Now, it's going to expand its margins anyway, but higher silver prices are really going to expand those margins. And that's one of the things I'm looking for. It's counterintuitive in some ways, but I've found something that works for me in the past is to find companies that are either just making a little money or else they're losing money at current prices. And I expect prices to go higher because then suddenly they're making a lot more money, or else they suddenly went from losing money to making money. Whereas a company that has the lowest costs in the industry, they'll go up certainly, but they won't go up as much because their margins don't increase as much as the other ones I just talked about. It's confusing and it's infuriating sometimes when you're buying the lowest cost producer in an industry, you expect it to outperform everything. That's actually not what happens, or at least that's what history has shown me. It's those companies that are on the edge that are just making either that they either have really tight margins or they're losing money at current prices, but just a little bump in price will help them start to make money. Those are the ones that really fly when the price goes higher.
Yeah, it's going to be interesting to see some of the recent financial results coming from these smaller silver miners that have been losing money. Q2 was a better silver price. Did they manage to make some money there and turn that ship around? And
Yeah.
to your point, how much are they still going to have to dilute to continue to grow? Sean, it's very clear, though, there's been a few silver stocks, let's say 10 to 20%, that are completely outperforming the market. And then there's that 80% that are not. They're all kind of in the same boat, just drifting lower and lower. Are you focused on those ones that are outperforming, or is it that play like those smaller silver miners where you're trying to isolate some of those 80% of companies that just aren't getting any market love because you think they should be?
Well, I want to own the ones that are outperforming anyway, because at some point I'll be having a conference and my subscribers will walk up to me and say, why didn't we own that company? It was doing so well. So I want to own them anyway, but I want to add to those. I mean, you can't own just a few. It's like, when you collect anything, right? You have to catch them all, or at least catch all the good ones. And so along with the good solid names that I put in there, I want to have ones that are kind of on the edge, because they really can start to outperform when things move higher. We were just talking about some names earlier before we went on the podcast. I can tell you now, Hecla is one I just recently recommended because it doesn't have good margins now, but it's going to expand its margins anyway. And it's bringing a new mine online later this year. That's just going to improve the outlook for that company so much. So if you can find stuff like that, I think that has to work to your benefit. I don't want to mention any silver miners that I wouldn't want to buy, but I mean, I'm sure your listeners can figure out those companies, and let me call one of them up right now. Yep, that just can't seem to make things work out either because for any number of reasons. I don't want to fixate on that. There are companies you shouldn't avoid, but one thing you should look at is what's been happening with their earnings trend. If they are actually making money or else losing money, but are their losses getting smaller and smaller over time? That's a good clue that if the price goes up, well, you know what? They're actually going to look quite good. I don't want to talk about the companies that I haven't bought yet, and I still plan to buy a lot of them. But these are things you have to keep in mind as you look at these stocks. And those companies that are on the cusp, I mean, I certainly think silver's going over 30, probably to 35 within the next couple months. And that just would kind of fit in with some other technical work that I've done in this. And so that's going to make a lot of these stocks look good. That's my working theory. Now it can change. Things can go wrong. Maybe the world will stop building solar panels. I don't know. But from where I look at things now, silver is underpriced and it is going to get more expensive. And that's going to make some of these silver miners a lot more expensive.
Well, Sean, I want to follow up on something you said earlier in this call where you said you want to watch for companies that are not diluting down their shares for whatever reason to keep the lights on. But you also threw into that comment, you don't want to see them diluting down to acquire other mines. But I would point out that Hecla acquired Alexco and did acquire a mine, but that dilution is going to be accretive. So maybe could you dive into the nuances a little bit more? Because what we're seeing is a lot of the producers breaking away from the developers and explorers. And at one point, their stock price is going to be a lot more valuable than the developers and explorers, and they could use that to acquire smaller juniors to add on future production or future mines to develop, or they could actually bolt on some single asset producers. We haven't seen a lot of M&A in the silver stocks. That's why I'm asking you, because Hecla is one of the few that I've seen actually go out and buy another silver company in the last year or so. Do you think we'll see more M&A, and is that kind of dilution possibly worth the candle?
I believe we absolutely will see more M&A. Now, the Alexco acquisition for Hecla, that was a heck of an opportunity. I mean, Alexco had a lot of problems, which we're not going to get into now, but really they had to go up for sale. In the bargain bin, Hecla swooped in, good for them. That's an addition that made perfect sense. But for example, speaking about gold, I remember one time I was on a trip, I was down in South America, and we were looking at a company and they were developing this gold project that was high up in the Chilean Andes. And, really they were trying to get someone to actually purchase it. And in the meantime, some of their guys had gone all the way down to Argentina. So far south, there are actually penguins running around there. And they had this gold project that had veins of gold about as thick as your little finger. Really nice, but it was way the hell out there. I mean, so far away. But they actually proved this thing up, and then someone came in and bought it. And what I should have known happened then is when that other company bought this project, that was the peak of the market right there. So at some point, we are going to get to a spot in the acquisition phase where people are just buying things stupid. Now, if you happen to own a junior company that's trying to sell a mine, that's a great time to be in the market that really is. But hopefully by then I'll be smart enough this time to be moving my subscribers out the door, right? Because we'll have already taken our games and the companies we own will be the ones doing acquisitions. And not everything can work out like the Hecla acquisition, where it just picked up this beautiful project for like a dime on the dollar. That was fantastic, what it did with Alexco. So let me just sum up by saying I'm always in favor of smart acquisitions that are accretive to a company's bottom line. And if you can see a project like that, the stock will usually go higher anyway because it's accretive. Sometimes it doesn't. Sometimes the market doesn't like the deal, even though it's an accretive project. And if you're already an owner, that will drive you crazy. But at that time, you have to turn into a buyer and you have to say, okay, the market has it wrong. I'm going to buy because this thing is cheap. And in a quarter or two, they'll actually prove that. So yes, I expect we are going to see more mergers and acquisitions here because there is a dearth of good resources in this space anyway. We'll see that go on for a while. When it gets crazy stupid, that will be your signal to get out because at some point that will come to.
Yes, it will. We've seen it many times, and you are right. Sometimes the market does get it wrong looking at acquisitions that happen, and that can be an opportunity. And yes, I'm with you, Sean. I'll let you know. You let me know when you think it's the top of the market because too many acquisitions are happening. Let's talk jurisdiction as well then, because look, a lot of silver plays are in Mexico, but there are also a lot of silver plays spread out around the world in some other well-known jurisdictions. Mexico has that political cloud over it right now with the change in government coming. But there are still some stocks that are doing very well in Mexico. There are stocks doing very well in other jurisdictions. Where you focus when you're looking at silver stocks jurisdictionally wise?
I almost recently bought another silver miner down in Mexico. I did not because of the, you want to say, uncertainty in what's going to happen with mines down there. So I'm on a wait and see thing with Mexico. But as you said, that just opens me up to what else looks good. Canada has good stuff. The US has good stuff. Argentina has good stuff. Australia certainly has potential down there. I am about to take a deep dive into Nevada projects because Nevada was the silver state and it still has the potential to find some really behemoths down there. So I might be going into the junior level there, absolutely. But you never know, might find something worthwhile. Other than that, there are parts of Africa that are good. In fact, we have one of our best performing silver plays is one in Morocco called Aya Gold and Silver. Now, they aren't producing gold right now, but they have a new gold project that they're trying to spin up. Right now, they're a pure play silver producer, which is very unusual in this market. It's in Morocco, which probably half the people, if you asked them where Morocco was, they wouldn't even say Africa. They would confuse it with Monaco. But Morocco is actually a great mining jurisdiction. So I'm just mentioning that as just as a way to get to the point that don't write off Africa just because you've heard about bad things in like one part of Africa. Africa is stupid huge. It is enormous. And there are places like Morocco where it's a great place to do mining. And a company like Aya Gold and Silver, I mean, for me, that is one you definitely want to own.
Yeah, Sean, it's a solid company with really good margins. And I think that what you said about the jurisdictions in Africa could be true of everywhere, including Mexico. You don't want to write off a whole country or a whole area. What you want to really do is drill down into the local states and provinces and like the local communities and see how the mining environment is there, because you can have wildly different environments within the same country. Just look at the US or Canada. There's provinces or states you'd want to do mining in, and there's even parts of those states that you may or may not want to do mining in. So great points about being selective and really looking for the good margins, looking for the quality companies. We're going to wrap it up here for today, but always appreciate getting your thoughts, Sean. And if people listening in want to get Sean's thoughts, definitely click on the link below this interview. It takes you over to his page at Weiss Ratings, where you can see both Wealth Megatrends and Resource Trader, so the publications that he offers to investors. You can take a deeper dive into Sean's analysis and follow along with the companies he's talking to his subscribers about. Sean, as always, looking forward to our next conversation.
Hey, thanks, guys. It's always good to talk to you.